Yo guys, what's going on? Welcome back to another video, and in this video I'm going to be explaining the lower time frame protocol I used to enter these trades. So just to recap, if you guys didn't watch the other video, please do so. Can't even speak. Please watch the other video, which is the higher time frame protocol video. It's where I explained how I analyzed the higher time frame before getting into these trades. So remember, you can't apply this without applying the other video. So please go and watch that. It will be at your benefit. Now, let's just continue. Let's quickly recap on what we were sort of talking about in the last video anyway. You can see that price, if I just mark this up here as well. Let's get this back down to this. Highlight there and drag this across. This is our bearish PD. As you can see, let's just put this there. And then let's just go into zoom in here. So we can see at the moment, price with CPI closed outside this blue PD array, which obviously kept it as a bullish PD array. We had SMT at the lows over here, which confirmed that we are flipping into a bullish sort of order flow right here. So price broke the Asia low. ES did not break the Asia low. Price closed outside. Price failed to close back below the blue box. So all I'm going to be doing is just look for buys into this red PD array and potentially breaking through it towards prior daily high, because we are bullish order flow. We're expecting for each day to break the prior daily high and continue bullish. That's what bullish price action is it continues to target the last day high, the last day high, and keeps going higher. So if we get rid of this just to make sure it's more clear, and then we drop down to the 5 minute. So just to show you on the 5 minute, it's a lot easier, right? You can see that with CPI right here, 8:30, price immediately slammed towards the downside. Price took out the Asia high, so this is all Asia price action here. Price took out the Asia low, and then we immediately formed SMT at this low because ES failed to take out the 6 o'clock low here. So what happened then, and how does price confirm this SMT, is that we're expecting for price to close back above this sort of high right here. And you can see that this is a smaller market maker buy model, as you can see, where we had a big drop and the price immediately traded back towards that high there. Now, with price closing back outside, we wait for New York open. Now, New York open immediately slams back in to the blue box. Now, this is just a pullback for me because I'm expecting the main expansion to be towards the prior daily high, and that's exactly what I did, right? So with this pullback here, you can see that price traded back into this range. We have obviously an inverse fair value up here, but I'm not looking at that. I'm just focusing on my 1 hour blue box. Now I'm anticipating to see, does price form SMT at these lows? Let's drop down to the 1 minute time frame so it looks a lot more clear. And when does price change in the state of delivery in order for us to get in? So I'm going to write down here what I use for my lower time frame. Obviously, let's just quickly recap the higher time frame. Higher time frame protocol, we are looking for point of interests and making sure that price stays at this point of interest, and potentially you can get some higher time frame SMT. Now with that, once that's confirmed, we then go into the lower time frame protocol, where in the lower time frame protocol, we look for, first of all, is there SMT? Is there a change in the state of delivery? And is it in the right time? So the time is very key here because it's always time then price. And I'll show you in today's two examples where both of the moves occurred in our timing. And it wasn't that we had to trade outside the timing or wait or something like that. I waited for the time. If it wasn't in the time, I left the charts and I came back at the next time, and then it was very easy to just go and get in onto the trade and take it. So if we move this to the right here, we'll have a look at what occurs. And again, just a point on lower time frame, we have is price in POI basically, right? That is the first point that we're having a look for. That is price within the point of interest. At this point, yes it is. You can see that it's within the blue box, right? Which is our bullish point of interest. Now we just need to wait for SMT. Now at this lows right here, we had SMT between these two candles right there with ES, right? You guys go and check in your charts. that this was where the SMT was. Let's do that to the bottom. So we have SMT here, but SMT does not mean anything at all until we get a change in the state. So we wait and see what occurs. Now, what happens here is we had a bearish point of interest, not a point of interest, sorry, a bearish PD array here. And we want to see price inverse this and close it back above. And you can see that price did. Price closed back above here and also back above this green candle here. If price does this, this then becomes a breaker block. And I'm going to break this down for you. This green candle here has now become a breaker block on a smaller time frame, smaller than the 1 minute to be honest. We drag this across, which is the breaker, because you can see with a breaker block, I'm going to explain this to you just so you guys understand. We have a low, a high, a lower low, and a higher high, right? This block here becomes your breaker and you can drag that across. We also had a fair value gap here as well. So I placed my limit right into this gap right there. And then the stop loss was almost below the low. I did bring it up a little because I was a bit more confident that price shouldn't fall back into this area here. Why? Is because we have 1 bullish PD array, 2 bullish PD arrays, which is a fair value gap, and 3 bullish PD arrays, which is the inverse fair value gap that was sitting here. So technically your stop loss could have been back above here. Can you see how many confluences we already have, and we potentially just haven't even entered the trade yet because we just placed a limit. So we have like 3 confluences of bullish order flow being confirmed here, and these are the signatures that the market leaves you, right, in order to get in. Because, you know, if the price action is dead and we don't get any of these fair value gaps forming, I don't take the trade. It's simple as that. I wait to see clear price action. My eyes are trained to see this stuff. And again, this is where you guys can put the work in and you guys can train your eyes on a day-to-day basis. You'll see that these patterns are forming, right? And it's not just the fact that, oh, you're a pattern trader, because yes, the pattern is a final point to get in. Remember, we've done the higher time frame. We've waited for the SMT. There's so many steps before that. And then people just focus on just pattern trading, break a block anywhere. Let's trade it. And then it fails and they're wondering, oh, why can't I make money? ICT is a scam. But the thing is that once you identify the pattern's the last point to get in. And that's why I said the execution is very easy, because you look for a specific pattern, then you just take the trade. And so if I sort of mark out the target here, you can see that because I'm trading this market maker buy model here on a 1 minute time frame, you can see how price is fractal. The market maker models happen on a daily, 4 hour, 1 hour, 1 minute, you know, so you can trade them on all of the time frames. And if I'm anticipating a larger market maker buy model towards this prior daily high, I can take the 1 minute market maker buy models and take multiple of them. Look, there's one here. You can see that there's another one over here, like so. And then there's another one that we took, which was this one. So you had 3 potential moves that we could have taken in. The reason why we missed this one is because this was not in our timing. And that's what I'm going to talk about now. Our timing, ICT said that each macro is from XX50 to XX10. XX50 of the hour to XX10 of the hour. So that would be 9:50 to 10:10, or that would be 10:50 to 11:10. Every hour you potentially get a setup forming every single hour potentially, but we only focus on the higher probability moves, the ones that have more volume, which is obviously New York Open straight after. So I would focus on 9:50 to 10:10, but what I also use is I use an extended macro, which is 5 minutes before and 5 minutes after, which is, you might have seen a lot of the time when I use 9:45 to 10:15. Now let's mark up where 9:45 is and where 10:15 is. 10:15 being right there. So you can see that within this blue range, we are in our timing, right? Price is in our timing, so we're anticipating a smart money reversal to form and price to move. Look how the smart money reversal, which is the lowest point of a move, right? That's where smart money has got in. The market should just flip and go the other way, right? Price formed the smart money reversal bang on 9:45. If price forms the smart money reversal outside the macro, so which technically it would have been outside, is just bang on, right? I'm anticipating the macro to expand, to just move into the direction of the trade. So look at this, how once we got in, price moved straight to the highs, and that is a 1 to 2 R right there. And it only literally took like almost like 10 minutes, not even that. So this is where, if we run through the, you know, the checkboxes on the left here, the lower time frame is, we see, is price in the point of interest? Yes, it is the point of interest, which is the blue box, right, that we've drawn on the left here, the big one. Now, do we have SMT? Yes, we do. In order to confirm the SMT, is there change in the state of delivery? We have this big fat candle which closed above, inversing this SIBI right here, and also creating a breaker block. Okay, is price in the right time? And then we have, yeah, it's within the right time as we got right here. Then all you just need to do is just take the trade and target your original consolidation of this market make and buy model. Now, the people who are in my VIPs are getting, you know, very, very specific content to explain what these market make and buy models are. I'm not going to explain it here because obviously this is free content, and this is more than enough for you guys to go and research. So you can see, this is not the prior daily high, sorry. This is the buy side liquidity of this move. So this would be target 1. And then if you drag this across, you could have potentially held this trade to take it up all the way to the prior daily high, which was right here. So that is the whole move. You can see that potentially it did take there, but I'm going to go and explain the second part of the move now and just show you in a bit of a quicker format as well now, because we've already been through the basics. So the first thing I do is just more or less mark up my timings when I'm going to jump back in to look at the charts, and that would be 10:45 to 11:15 because it's an hour later. I don't use the I don't use this sort of macro to look at the timing because this is lunch. So there's only sort of 2 AM windows I look at, which is the 9:45 to 10:15 macro. And then if you just copy this across, it's the 10:45 to 11:15 macro. And that's the sort of last sort of entry I do in the AM session. And again, there is PM session times, but for now we're just going to be focusing on the AM session. So the reason why I look to enter this trade is because prior daily high has still not been reached yet, and that is my goal for the day. I think that is the goal for IFTA. I was anticipating that the goal for IFTA was to get to that prior daily high as the, you know, that's done for the day. And you can see, just to show you an example of that, is once the prior daily high was reached, look at the price action after. We didn't go anywhere. So that confirms to me that I was on the right side of this move. And it's a great feeling once you understand that you're on the right side of the market, and you can anticipate and call these moves, and especially I'm calling them on VIP. Anyway, besides the point, let's go again. Right, high time frame. The reason why the higher time frame doesn't really apply in this case is because we have already started the move from down here. So this is just a continuation play, right? We can't always say that, oh, it's priced in the higher time frame if it's already been in the higher time frame, you know, an hour before. So this is where the move began. Right in the circle, which is in the high time frame. You can see that price never returned there and went straight to the prior daily high. So if you held that one trade, you could have got to the target. But because price closed, you know, I aggressively trailed the stop loss, and you can see that price closed at my stop loss right here, which is in profit after we took partials at the highs. I decided to go say that, you know what, I'm going to see if I can enter again, which is not all bad because obviously all our trades are not perfect. So what happens is that we come back at our next timing and we have a look at what price action is doing. It's pulling back into this area. And what do we have on the left? We have another breaker block, which is created right here, right? We have let's draw this out. We have a low, high, lower low, and then higher high. So once price closes back above, I'm anticipating this blue box to hold. So technically, you could say that this is my point of interest on like a 5 minute. So this is like a point of interest in a way. So because I had is price in point of interest again, I had another point of interest I was using on a very smaller time frame. I was like, okay, is there SMT? Now at these lows right here, we had SMT form on ES, right? Form against ES right on these lows right here. So we had an SMT. Otherwise, if there was no SMT, I wouldn't take the trade, right? So we had SMT. Now we look for change in the state. It's very, very simple, guys. These steps are a lot of people overcomplicate trading, but this is very, very simple right here. You can see that we had a bearish PD which was flipped into a bullish PD, but I'm going to explain to you what happens. Right? We have a price pushes down and price pushes up, price pushes lower. Again, guys, this candle right here becomes another breaker block. And this is where we're saying that time and time again, look, the reason why it's a breaker block is because it took out the prior low and then price formed a higher high. So this is your breaker block now. However, the reason why it didn't need to retest it is because we had an inverse fair value gap right here. And this was enough for a change in the state for me. So I decided to enter the trade. I entered the trade here. I went long right there. Once this candle closed outside, we went long, and then stop loss was below the SMT low, and then where's the target? It's the prior daily high. So we immediately know that this is a 2.7R, right? Look at the risk to reward ratio on these trades, and then look how long it takes to hit the target. So the sort of move happened at 10:59 initially. If you can get the ruler up, I don't know how to do that. There we go. All the way to the right here, literally took like 20 minutes to get to the target, and then we were done. So then that was our 2 trades right there where we ended up taking these moves. And a lot of people I've noticed this week are saying that the price action is very hard, very tricky. And to be honest, if you zoom out and have a look at what is order flow actually doing, you'll be able to understand that order flow is still bullish. So I don't need to even care about bearish price action at the moment. I'm just going to follow order flow and just keep targeting highs. And you can see that these 2 examples explain just that. They were in our right time, they were changing the state, SMT was there, and just take the trade, just execute. So I hope you guys enjoyed this video right there. This is my sort of lower time frame, and that was the key draw on liquidity, which is the prior daily high. And one thing that put the cherry on the cherry on the cake, or the icing on the cake in a way, was the fact that after the prior daily high was hit, the price action did not do anything after, which tells us that was the end goal for the day. That was where if there was targeting to end the day. And you can see once that happened, price basically consolidated all the way until Friday, and then prior monthly high was on Friday, but that's for a different video. So we keep it like that. Hope you guys enjoyed. Do sort of rewatch these videos over and over again every time you're sort of in your learning. Don't forget to follow the free channel. The link is in the description. I share the execution videos for this. TikTok as well. I share my executions right there. So that's pretty much it. It's been your boy, Waste FX. Peace out.